With former President Donald Trump winning the election, folks might be wondering how this factors into their financial planning. Bob Powell, editor and publisher of the Retirement Daily and host of Yahoo Finance's Decoding Retirement, decided to ask a whole host of people and financial planners about what kinds of moves they are making, and especially those who are planning for retirement and what they should be doing right now. Bob joins me. Bob, let's start with some of the commentary that I saw in your article about crypto and Roth IRA conversions. I didn't expect to go here first, but we have to because this is what folks are talking about.
Thanks, Brad, for having me. And let's talk about some of the fun stuff first. So one of the advisors, planners that we talked to said, think about this as a barbell investment strategy where on the one hand, you might be putting your money into what is ordinarily described as a risky asset, cryptocurrency. And what I might suggest is, he didn't say how much, but like with any asset of this sort, gold, et cetera, maybe no more than 5%. And then on the other side of the barbell is to think about safe assets. So maybe start thinking about putting your money into CDs or what are sometimes referred to as multi-year guaranteed annuities, and maybe create some either CD ladders or MYGA ladders, where in which case you'd be taking advantage of whichever way interest rates start to go. And then what we're going to see now, Brad, is a common theme among three planners all saying the rush to do a Roth IRA conversion is now less because of a Trump administration where tax rates may stay the same as they were during the Tax Cuts and Jobs Act era. And what you want to do when you think about the Roth IRA conversion is to do it in a smart fashion. You want to do either a partial or a full conversion, being mindful of how much income you're creating and whether you're pushing yourself into from the 22 to the 24% bracket, or from the 24 to the 35, or the 35 to the 37. Because when you push yourself up into higher brackets, you create all sorts of problems. If you're a Medicare beneficiary, you might find yourself paying a higher Medicare Part B premium. And obviously, if you're pushing yourself into a higher tax bracket, you're paying a higher tax rate. So be really smart about Roth IRA conversions. And one thing I'll mention, one of the planners mentioned about the benefits of doing a Roth IRA conversion is when a surviving spouse, a beneficiary, perhaps receives, or an heir receives a inherited Roth IRA, they don't have to worry about paying taxes on the income that they'll be being distributed from that Roth IRA. And if you're a surviving widow, you won't be exposed to the widow's tax bomb, where oftentimes when widows receive a traditional IRA and start taking RMDs from those accounts, they push themselves into a higher tax bracket. So that's the one thing to be mindful of as we talk to these planners about doing partial and full Roth IRA conversions. One thing I might mention too, though, is one of the planners that we talked to said, don't base your investment choices on who is president.
Right.
And I might say, maybe you should consider this a little bit as you talk to, one of your previous guests. There are certain things, certain investments, small cap stocks perhaps, that aren't affected by the potential tariffs that will go into play. That might be more beneficial than large cap stocks, multinational companies that are exposed to international markets where the tariffs may affect ultimately their profits. So I think on the one hand, we shouldn't let elections dictate how we invest. On the other, I think we need to be making some tactical moves.
Yeah.
And then the last thing I'll mention, I think, is this notion of what the extension of the Tax Cuts and Jobs Acts could do in terms of income for retirees. We may see Trump moving, for instance, during the campaign, he proposed that he wouldn't be taxing Social Security benefits. And that would ultimately affect about 50% of Social Security beneficiaries. And that would be a huge boon to these folks who wouldn't have to pay taxes on their benefits. And what I might suggest, too, is that this is an interesting thing, because it's like pulling a piece of thread on a sweater. No one knows what the effects of not taxing Social Security benefits will be on, for instance, Medicare Part A, which is those taxes are used to fund, in part, used to fund Medicare Part A. And then the last thing that Trump has proposed is this notion of eliminating the $10,000 cap on what are called the state and local tax deductions, the SALT deductions. And that's mostly something that affects taxpayers in high income tax states or high property tax states, mostly blue states for the most part. And that could be a welcome relief to many folks who have a high either real estate bill or local income tax bill.
All right, Bob, a lot to keep tabs on here over these next few months and in transition as well.